They're checking out on the fundamentals of the economy as well as on these noises on the abolition of the Planning Commission. Ajit Ranade, the Chief Economist at Aditya Birla Group, is joining us. Good morning, Ajit. Thank you very much for joining us. Well, we were discussing growth dynamics, so let me first get that view in from you before we start speaking about the Planning Commission. What is the sense you're getting about growth? The macroeconomic numbers so far have not been encouraging, but do you see a big bounce in the second half of the year?
Well, right now the thing to do is to observe the momentum on a month-to-month, quarter-to-quarter basis. So some leading indicators are, for example, on the trade front, the non-oil, non-gold imports, which signify economic activity. The PMI, of course, for June was a little bit of a surprise, but the PMI. So I think we are seeing momentum. We are seeing a slow month-on-month movement. As you said, it's not a big bang, but things are moving in the right direction. Some of the stuff, one particular statement in the Prime Minister's speech on Independence Day, that he thinks that there are many governments working within one government, and he wants to break down those silos. That, if that actually happens, the interministerial coordination, the sorting out of issues, the legal disputes, sorting out of clearance matters and approvals, all those things I think will start seeing some impact on growth.
Okay. Mr. Ranade, hi, good morning, and thank you for joining in. What's your view on how on the impact of the Planning Commission being scrapped, and how this new think tank can actually be recast, or rather cast?
Well, yes, the discussion about revamping, if not actually scrapping the Planning Commission, has been going on for quite some time. In fact, as way back as the late 1990s, I remember the current, the outgoing deputy chairperson had said, that Planning Commission should be shut down or something like that. So there has been talk on, there has been discussion about it. The Independent Evaluation Office, which was set up by the Planning Commission itself to actually evaluate all the centrally sponsored schemes and their effectiveness and the outcomes, in its report, I believe, also recommended that the Planning Commission as it stands should be scrapped. So that happened very recently. So it should not be that big a surprise that the Prime Minister announced. But of course, the decision has been taken. That was a very big historic announcement.
No, but Ajit,
and, as you know, ever since...
What role does the Planning Commission perform? In the budget statement itself, in the budget at a glance, you have the plan expenses and the budget, the budgetary sanctions for the planned element. Now, who provides that? The absence of that big entity, what kind of an impact will it have?
Well, historically, as you know, the Planning Commission was supposed to develop perspective 5-year plans, provide strategic inputs, and provide vision documents and sort of theoretical background. But it became a de facto fund allocator. So as you say, the plan portion of the budget, which this year is about 5.5 lakh crores, was actually the conduit for disbursement. It became the Planning Commission. In fact, it acquired a de facto allocator role, and we had this routine annual exercise of state chief ministers presenting their capital expenditure plans, plan expenditure for the year, and then the Planning Commission used to give its approval. So I think that role was not what was the original intent. Any such allocation, if at all it has to happen, it has to happen on a constitutional basis, and the Planning Commission had no constitutional basis. It's only the Finance Commission, but Finance Commission only does the split of the revenues, the current revenues. We don't yet have a mechanism to have capital allocations, especially to take care of backward regions. You want balanced growth across the country. So we will have to develop a new mechanism where capital grants, what is called infrastructure or long-term plan funds, as we call it, this terminology itself will change. Let's call it capex versus revenue expenditure. So we don't yet have a constitutional process to determine how central funds can go towards states, towards capex. And this does not have to be like a formula-driven thing, what the Finance Commission follows. So I think what's going to replace, we have to see. Currently, the contours seem to be like a think tank. Maybe a separate constitutional machinery has to be set up for the capital grants, and all the quote-unquote fund allocation rules will go back to the finance ministry for the time being, at least. That's the expectation.
Okay. I just wanted to shift focus away from this issue for a bit and ask you about your view on inflation, because that's what actually cheered the market a little bit, the fact that WPI has fallen to that 5-month low. Do you think pricing pressures have simmered, at least for now, or do you see a resumption of inflation worries, say in the latter half of the year?
Yeah, I think this remains as the central challenge of macroeconomic policy in India today. If you look at the Reserve Bank of India's surveys on inflation expectations, for the past 5 years continuously, the inflation expectation survey is revealing 12% minimum. That means the consumers out there have expectations that inflation will be around 12%. So this inflation expectation genie has to be put back into the bottle. The expectations have to come down by a notch of at least 2 to 3%. That's the central key macroeconomic challenge. So of course, anything that we do towards not just cutting inflation, but inflationary expectations. Now I fear that if now there is a pickup in industrial activity, because our potential growth rate has dropped to around 7% or maybe even lower, increase in demand as reflected from non-oil, non-gold imports or industrial expansion, industrial growth will actually add to pricing pressure. So, it is a very, very challenging task. Thankfully, we are seeing some indications from government policy. I think fiscal policy will have to contribute a lot towards inflation management, not just monetary policy. We have seen the decision on MSP, which has been controlled, which has been kept low. So, a series of such decisions will help. And of course, the RBI is going to, act only when it gets this level below its target level. So the month-on-month data on WPI or CPI will be watched very closely. But please keep in mind that actually what is key is the inflationary expectation, not just the inflation number alone.
Yeah, and that didn't show too much of a dip on certain areas in the June survey. Well, Ajit, one final, if possible, a monosyllabic question. When is the next rate cut, according to you? Next rate action, that's all.
No, yeah, you see, Lata, this question assumes that inflation management is primarily only the responsibility of the monetary authorities, the Reserve Bank. As I said, if you are thinking about inflation management, it is a joint exercise, cooperative exercise, and in my mind, 80% of the contribution has to come from fiscal. So in that sense, if the central bank actually does a rate cut, it sends a very wrong signal, according to me.
No, I agree.
So
that's why I'm asking you
the kind of pricing pressures. So I don't see anything until calendar 2015.
Okay.
There may be extraneous, of course, industry and especially small and medium enterprises have been crying, are thirsting for a rate cut because it affects their working capital, it affects their margins, it directly goes to their bottom line, and even a 50 basis point cut impacts. But you see that if we can't get the inflation genie back into the bottle, all this will be temporary. The volatile and high inflation is the enemy of growth. So actually, if you want sustained economic growth, we have to have inflation at a lower level, which means we can't let go of the interest rate, the hawkish stance that we have currently. So I feel on this, at least from this perspective, I don't see rate cuts happening till the next calendar year.
All right, we'll leave it at that. Ajit Ranade, pleasure speaking with you as always. Thank you very much for joining us.